Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup as well as the market strategies from our top market experts who will be joining in on the show over the next 1 hour. We will be telling you everything that you need to know about the trade today. First up, let's start off with a recap. Indian markets did slip yesterday. We did see the Sensex falling almost 1300 points. This is after Monday's rally of 4% on the benchmark indices that put the markets all the way up a 7-month high. We've also seen that on Monday, as the ceasefire occurred on India and Pakistan, the D Street celebrated with the biggest absolute gains on the Nifty as well, with over 900 points of a gain. But yesterday we did give up some of them, about a third of those points, 300 points down on the Nifty. This was also largely led by some fresh concerns emerging that despite the ceasefire, there was some concerns on the geopolitical borders, still some violation of ceasefire was being done by Pakistan. At the other end, if you look at, there was also a concern about that US and China are easing out the trade deals, but there is a question mark on whether US and India are yet to actually come out and find out about what the trade deal could be and whether it could be China's template that we could follow or it could be something else completely. So that's something that weighed on. Profit booking also took shape in yesterday's trading session and many such factors contributed. Now, as far as the overnight trade concerned of the US, it was a tech-led rally that led to the US markets negate losses for the year. And this is as after the trade war that was kicked off by President Trump is now heading relatively to calmer waters. Shares also marked their highest level since February, especially for S&P, where the all-time high was seen. So the market's finally climbing up. S&P 500 rose by about 0.7% in trade. Nasdaq climbed about 1.6%. Dow Jones also, however, lost by about 0.6% in trade. Now, as far as the Asia markets are concerned, following the Wall Street gains, the chip stocks in Asia also traded higher. And we did see some move on that front after the NVIDIA announcement as well. Remember, NVIDIA is going to be selling 18,000 GB300 black belt chips to Saudi company Humain, and that's something that is pulling up the stock NVIDIA higher, and that's also led to some of the stocks in the Asia markets also up and about. Although there's a mixed trade across the board with Nikkei, ASX 200, China, Hong Kong at this point in time. GIFT Nifty is indicating a flat to a negative start. You can say 24,729 is what's being indicated. Let's also look at what's happening on the macro level on crude. Crude has gained about 2% overnight. Brent is back above $66 a barrel. Experts do believe that there is an upside that is seen, which is limited on upcoming OPEC plus supply increase. So one will need to have a watch on that. On the FPI front, remember, overseas investors have again turned net sellers of Indian equity markets after a day of buying. Foreign portfolio investors offloaded equities worth about 476 crores. We've also seen domestic institutional investors, however, stay net buyers for the third session. They bought stocks worth about 4,273 crores in trade. Now, as far as the macros of India are also concerned, remember, we are going to be reacting to even the inflation numbers today. The April CPI, that's the retail inflation for India, is now at a 6-year low, and that's a big positive. From last 4 months, we've been seeing an inch down on the inflation number, and now it's at 3.16%, way below the comfort level of the RBI of 4 plus and minus 2% band. Right now at 3.16%. So we are very comfortable on that front. It's the food inflation that has all the way inched down to now 1.78% only. On a month-on-month, it's fallen from 2.7%. Vegetables inflation continues with its deflation trend and now is at a negative 10.98%. So that's something that we will be discussing with our top guests as well. Now, of course, apart from this, we will look at a whole host of stocks that will be reporting their numbers, that have come out with their numbers. All in all, today, 126 companies will be reporting their numbers, with Eicher Motors reporting its numbers from the Nifty list, but those that have reported, we'll keep an eye out on Tata Motors. Q4 highlights show on a consolidated YOY basis that the revenue uptick was seen of 0.4%. We'll also keep an eye out on how EBITDA improved by 0.6% here. Margins of 14% versus 13.9%, although the net profit slipped by about 51.3%. So we'll continue to keep an eye out on that. The guidance, remember, for Tata Motors, both for JLR and overall for Tata Motors, will be seen in the upcoming times when the investor conference will be done. Let's look at Bharti Airtel. That's another big number that we are watching out for. Q4 FY25 result highlights on a consolidated QOQ basis that revenue uptick was seen at 6% at 47,876 crores. EBITDA improved by 10% for the company at over 27,000 crores. Margins improved to 56.4%. Net profit down, however, 25% at 11,022 odd crores, and the ARPU is steady at 245 rupees. From the defense pack, we look at Garden Reach Builders. Q4 highlights show that the revenue improved by 61.7% to 1,642 crores. EBITDA improved massive by 145%. We've also seen that the net profit improved by 118.6% as well, and the margins also from 8.9% have jumped up all the way back to 13.5%. That's another one that you're looking at. Max Financial is also another name that you could be looking at for numbers. Consolidated revenue, excluding the investment income coming in at 32,620 crores, grew 12% year on year. Consolidated revenue does include the investment income that stands at now 46,497 crores, and consolidated PAT 3 crores. That will be something that we will watch out for. Time to welcome our guest on board. We have Mr. Gaurang Shah now joining in, Senior Vice President of Equity Investments. He's with us on the program. Warm welcome to you, Gaurang, and thank you so much for taking the time out. Yet again, a lot has transpired from the last week till now that we spoke. We've faced terrible times on geopolitical tensions every day and night. We've been up and about to see how things were panning out. A ceasefire that really was welcomed with both hands on the D Street, but thereafter some kind of a profit booking again. What's the stance that you're looking at on the markets now?
Thank you so much for having me on the show, Sakshi. Good morning to you and to everyone at BTTV and watching the BTTV channel. So I guess the confidence only get reinforced when you have three different forces protecting the borders, and along with that, an institute which is renowned for its innovative technology and R&D, that is ISRO, which was a part of back-end support for the armed forces who were handling the situation, which was unfortunately created by the country that neighbors our boundaries. Having said that, I think, yes, you rightly mentioned it was welcome, but the big question is how much can you trust them? They are a people of, brainless branch of jokers they are, and unfortunately, wisdom does not prevail upon them. So we'll have to wait and watch as the situation evolves. Markets, I think, after seeing a fantastic run-up day before yesterday, we cooled off. I don't think anybody has to complain, Sakshi. And the levels that we reached, 24,800, closer to 25,000, are known to be zones wherein you have top-heavy feeling, you get vertigos. And in form of profit booking, those vertigos translate into a little bit of downside. But I don't think you have to complain. I think the macros and the micros, as far as the domestic numbers that have unfolded, are very good, including the one that you were mentioning, inflation, way below the comfort zone of the Monetary Policy Committee. And I think it's only builds up the case for a rate cut as we go into that particular event. My sense is that 24,400, 24,500 on the downside remains a very strong floor in terms of support. Upside, I would again mention 24,700, 24,800 to be a top heavy vertigo zone wherein profit booking will come in. And in case, just in case, if we are able to cross over 25,000, then I think you should look forward to 25,200, 25,300 on the Nifty spot. Having said that, I think sectorially you will see good performance on backdrop of decent quarter earnings.
Absolutely. Now, Gaurang, the other big event that unfolded is on the global trade talk front as well, between US and China, how things are scaling down in terms of, the tariffs that are being put to each other. There is a softer stance from each of them. For US, they have reduced sharply their tariffs on China to 30% from all the way up to 145% that they had put. China reciprocally will be putting 10% tariffs there. So there seems to be some kind of a truce that's coming in on that front. This was one of the major reasons where global markets were also keeping a keen eye out on. How would you look at what's developing here? And the key question will be that do you think what's happening with US, UK, US, China now could be seen as some kind of a template that could be followed with the rest? Or do you think India will have to see completely of something different?
So you forgot one more event, Sakshi, that is the intelligent and wisdom-oriented President of United States of America, Mr. Trump, is in a visit Middle East and he signed some deals with Saudi Arabia.
Yeah.
Incidentally, he got a Air Force One aircraft also as a gift, I have heard. I don't know how much. I mean, I don't read too much into it, to be very honest. So my sense is that, yeah, I mean, somewhere rational thought process is coming in, and 2nd of April was a big April Fool's Day, according to me. Though it was not on 1st April, it was because Mr. Trump said that he doesn't want to announce the tariff on 1st of April because he's a strong believer of that, but he turned out to be a fool himself. And now, after day, slowly we are seeing those announcements made on tariffs of 180 plus countries are now, settling down. And a blanket window period of 90 days has been announced by the US Trump administration. Deals are getting signed. We have signed a free trade agreement with UK. I beg your pardon. We have finalized the terms and conditions of free trade agreement with UK. We are working almost through, according to, again, President Trump, who also incidentally took credit for this ceasefire. I wonder what happens to his thought process. Where his gray cells are, honestly, I really wonder, Sakshi, to be very honest. Anyways, he'll do what he has to do. We have to do what we have to do. So we are working towards finalization of tariff-related trade agreement with US. China, US, I would take it with a pinch of salt or a fist of salt, to be honest, because you never know what these two countries are going to do. The leadership are so, they are not balanced at all, to be very honest. I have my own doubts for both these leaderships in US and China. So yeah, I mean, markets have reacted to it, and it was so positive. I don't think the markets would have given up the gains, right? So market does not read too much into it, according to me. And my sense is that we will work on our positivities, on our numbers on macro and micro, and I think we will find some kind of stability. But there will be a little bit of choppiness, volatility. India VIX needs to cool off substantially, though it has come down from 20 plus levels to 17, 18. I think somewhere close to about 14, below 13 would be a comfort zone.
Okay, the GIFT Nifty was indicating to flat to positive start, and that's how we are seeing about a 0.5% of an uptick. 24,700 is back with us. Let's hope that this continues to be the case. We'll continue to look at some of the stocks, but staying with the macro front itself, what's happening with US and China is for us to really see how it pans out. But yesterday, Gaurang, there were some statements that India is now thinking of putting some retaliatory tariffs on metals, aluminium through WTO. How would you read into such statements? Do you think there was some questions, debates around whether India and US have hit a rough patch? What would that mean for the tariff troubles between US and India? How should retail investors read into that?
Incidentally, this came after the great president said that he was the instrumental person using the trade as a ceasefire tool. Am I right? Correct me if I'm wrong.
Absolutely.
So I think, when you have a naughty boy in your family, you need to pick up a whip. Okay? Because words do not get across to that person because that person does not have common sense or wisdom. So you need to pick up a whip and you need to strike that whip on that person to make, realize, and bring common sense and graces in the right place. And I'm very happy when I read that and I heard that. I'm only eager to know the date of implementation because look, boss, you are US, you may be US in that part of the geography. Here we are India, we are Bharat, we are Hindustan, and we know what we're doing. So I don't think we need to take a diktat from anybody or consult anybody. And I'm very glad that the government has taken this, and I hope it gets implemented. Sometimes you need to put those kind of jokers in the right place, to be very honest.
Okay, then fair points there. Let's look at some of the other aspects also. I always ask you on the FPI front, and I will also ask you again. During the time of this distress, during geopolitical tensions, tariff war, uncertainty, over the last 15 days, what we have seen periodically FPIs build onto their purchases, but it's now starting to miss again. Yesterday's number was a miss. Day before, one day prior number was a miss again. Was this just a tactical bit as far as the FPI stance towards India is concerned? Or do you think it's better they come back, because now we would be actually seeing the worst behind and probably looking ahead again?
Well, honestly, I'm not missing that crowd in the party, to be very honest. I'm enjoying the party even without them. So, and nowhere, I mean, you don't have consistent flows every day, every second day. That
Yes.
FIs also don't do, Sakshi, that DIs also don't do. Let us be very honest and don't try to convince ourselves on fault lines. So there
Correct.
are days wherein they come, they go. But my strong belief is that the retail participation has stayed strong. The retail participation has supported the domestic institutions with all the kind of liquidity they want to absorb the sell side figure from the FIs, and they will continue to do so. I say this with a lot of confidence and responsibility, Sakshi, because I've been interacting at ground level. I've been traveling length and breadth of the country, not only in large cities or tier 1, tier 2 cities, but even below that. That's where actually the money is coming in, the liquidity is coming in, and this is going to continue. So, if not now, later, I mean, again, they will also wake up, smell the coffee, and start putting in money into economies and equity markets where growth is 6% plus. I don't think anywhere in the world you are seeing the kind of growth rate that India has GDP in terms of the run rate. We've had a decent lower number on inflation, which will again kind of guide you towards another rate cut very soon.
Okay.
So,
Mm-hmm.
we have all the positivity. So FIs will, they have come, they have gone, they'll come back. What is the big deal?
Absolutely. Let's also now focus on some of the sectors and key stocks that we can take Gaurang's view on. Let's start off with defense. That's been the talk of the town. And, for not even once, Mr. Gaurang Shah, during, the kind of dips or downturn that we saw, did he, say that, maybe it's not the space to be in? Every time he said that this is not a call for 1 or 2 months, this is a call for many years. And, things are coming back and coming back. How for PEL, for HAL, for BTL. We saw what happened with shipbuilders yesterday, Zentech, Idea Forge. All across, we've been seeing, tremendous moves come back. Garden Reach has come out with the numbers again. Huge order flows coming in. And what we are now seeing, Gaurang, is that PM Modi has been now throwing his weight behind. We need made in India equipment when it comes to defense. He has praised them. He's also been talking about more made in India equipments there. How do you find, the defense space as of now? Your true belief that has stayed put all through last 2 years?
So, Sakshi, I think the conviction and confidence only gets reinforced. And I very humbly submit to the Honorable Prime Minister, because of this government, way back in 2015 or 16, we had a policy which opened up FDI in defense, Make in India, and which enabled the uh, retail investors to participate in that good story, and wealth was created. Rest is all history. I don't want to go into much detailed, numbers in terms of IPO, etc. So my sense is, and of course, with what other certification you want, Sakshi, when the Honorable Prime Minister himself has mentioned, not only mentioned, we, you and me and the entire world, and we as citizens of India have seen the kind of lethal force that was unleashed, and the kind of capability and capacity, the technology that was used. to protect our borders and no, not to have any kind of civilian damage. Uh, so your domestic growth story is always intact in terms of capability and capacity. But I think with the kind of what the world has seen, uh, where if bringing down drones and missiles and God knows what not that was fired from across the border, and we very successfully able to shield our borders, right? So I think the world has seen that. I think it will be, or there was already an opportunity for export. I think the export opportunity is only going to multiply in terms of orders coming in. So as a brokerage house, we at Geojit Investments Limited still remain positive on the entire defense pack. And my sense, and I'll again say this, what I said over the last couple of months. If you're investing in defense, don't look at 1 year, 2 year. Look at 3 years and 5 years. That's when you will actually make good, handsome returns on your investments.
Garden Reach, meanwhile, is indicating a start above 13.5%, at 21.75 after those numbers that have come in. That's the kind of stellar move that you could be expecting there. But Mr. Shah, would you say that, those who have missed this kind of a run up in the last 1 month on the defense space, can they still enter?
My humble request is don't cry over something that you don't have. Sakshi, I always believe in one thing: what you don't have, you never lose. Am I right? So, I mean, why cry over something that you did not do? Realize your mistakes. Bring common sense and rational thinking upon yourself and start getting invested. I will again repeat, this is a sector. If you have the high risk appetite, you go and put all your money at one time, right? Put all your bets at one time. But if you are a seasoned investor with a low risk appetite, use an SIP model. I think that's the best way to get into the market.
Correct.
The market is not going to run away anywhere. Markets will give you opportunities. Up to you whether you take that opportunity or not.
Correct. Absolutely. Now, let's focus on some of the stocks beyond defense as well. Let me ask you on Tata Motors, sir. That's been a stock that we have discussed so many times over. The earnings have come in. We've seen a period of about 6 months when the stock has been absolutely range bound. Of course, impacted by the news flows again. Now it's for now inching back above 700, yet again trying to find its feet above the waters now. Help us understand after the earnings, what's the sense that you have on Tata Motors? Things also improving on the auto tariff front, deals between India, UK, deals between US, UK. How would you look at Tata Motors now, sir?
So there's going to be a 10% difference overall with the UK US trade deal getting signed, sealed, and delivered. We are also almost on the verge of signing a deal with UK. I think tariff by the time the 90th day comes, honestly, Sakshi, it's going to be history. It's not going to have any. This is my strong gut feeling, and I hope I'm right on that. This is my personal gut feeling, and I hope I'm right on that. So on Tata Motors, we are, and we remain positive. Yes, there were difficult times, but with the numbers that were delivered yesterday, we are seeing signs of recovery and stability coming in. Now, I'm not saying that this recovery and stability is going to come in the next 1 week, 2 week, 3 months. It will be a long drawn recovery, but it will be a stable recovery. And once that is in place, I think the growth trajectory is going to turn around for all the positivities. So we remain positive. 850 plus is the target on Tata Motors.
Okay, got that. We also have some brokerage houses reports on Tata Motors, and I'll just reiterate for our viewers to see. CLSA on Tata Motors has an outperform rating, a target price of 805. They do believe the JLR fourth quarter EBIT margin at 10.7% was in line and up 160 basis points Q on Q. Their CV business EBITDA margin, including the PLI benefit, came in at 12.2%. They also believe India's PVs have reported EBIT margin of about 7.9%, up 60 basis points year on year, led by better product mix and accrual of the PLI incentives. Those are the positives on the back of which they have given a target price of 805. Jeffries, on the other hand, has an underperform rating on Tata Motors and a target price of 630, which is much lower than the current price of 690 odd levels. Now, they do believe that JLR is likely to face a tough year ahead due to the US tariffs, increasing competition in China, rising consumer acquisition cost, and They have also cut the FY26, FY27 estimated EBITDA by 8%, although they have raised the EPS by 3 to 4%. So we'll look at both these aspects as of now. The second number that we're looking at is Bharti Airtel. That's the other big important number that came in. Revenue uptake of 6%, EBITDA improvement of 10%, margins higher at 56.4%, highest in the last 5 years again. So that's something that we will look at for Bharti Airtel. Net profit also down about 25%, 11,022 crores, and the ARPU steady at 245 rupees. Gaurang, how about Bharti Airtel? What would you say? It's slightly better than estimates, the earnings coming in, largely on the inline side for India business?
Well, better than expected, definitely, yes. And I think the entire telecom pack is also buzzing. This is one sector that remains driven by the consumption story as far as consumers like you and me are concerned. Data usage is steadily going up since the time COVID struck the entire world, and post that, I think data usage has gone up. Tariff revision has happened. We believe one more tariff revision by the time we say goodbye to this year, December 2025. A positive view on Bharti Airtel. Along with that, Reliance Industries also, because geo mobility businesses within the balance sheet of Reliance Industries. There is one more company, Sakshi, which again, we had covered during the IPO. Currently, we don't have a coverage, but looks very promising. Numbers were very strong. Belongs to Bharti, that is Bharti Hexacom.
Okay, yes, 5% higher, today in the pre-open trade after the earnings, and that's something that we will also look at as well. Let's now focus on some of the other aspects again in the markets. Some, key inclusions on the MSCI Global Index. So Nika is getting an inclusion there. I wanted to ask you on that front as well. Both Coromandel as well as Nika getting added to the MSCI Global Standard Index as part of the May 2025 semi-annual review. Your sense, there are some expectations it could bring in passive inflows of about $220 million for Coromandel. For Nika, it could see $181 million of inflows as per IFL research that we've got the statements coming in. What would you say?
Sakshi, honestly, if you ask me, I've been very... I don't want to be rude, but one question I'll ask, is it the first time that we are seeing entry and exit between the MSCI or the Nifty or the BSE? There are a lot of stocks that have come in and gone out. This, what you're mentioning, has an impact for just 2 to 3 minutes. Okay. Till the time this entry exit and the fund flows happens. Does this have any material impact on the functioning fundamentals of the company? Zero. I don't think it has any material impact on the fundamentals. So, these are questions for technical analysts, and these are more important for traders. And most of the traders also end up losing money because the deals happen within a flash of the eye, and then you are, stuck with a lollipop. You can't suck it, you can't gulp it, you can't eat it. You have to just look at it and be happy. So fundamentally, nothing changes, Sakshi, as far as this entry, exit, outflows are concerned.
Okay, got that. Let's shift focus to the markets. Opening into the green, both the Sensex and the Nifty. At this point in time, we are seeing an uptick of about 0.2% on the frontline indices, about 0.3% on Nifty Bank. Even on the mid and the small caps, we are seeing about a 0.3% of an uptick on mid caps. 0.7% higher for the small cap index. So the broader markets that moved up yesterday, bucked the trend, are continuing with their move. 1485 advances on the Nifty, whereas 261 declines on the NSE at this point in time. That's something that you should be looking at too. Apart from this, when we look at the top gainers on the Nifty, you do have names like, a lot of names like Bharti Airtel are coming up in trade, CEAT, BEL, Infosys, ONGC, Tech Mahindra, banking units like Bank of Baroda, PNB, Federal Bank. Those are pulling up. Geo Finance continues with its upward trend at this point in time. On the losses side, you have Tata Motors, Cipla, that's on the declining side today. At this point, about 3% of a fall for Tata Motors post earnings. 686 can be seen right now. There is almost a 20 rupee of a fall on this one. Cipla again 2.4% lower at 1483 odd levels that can be seen. But the results impact are positive on Max Financial. There's an almost 3.7% of an uptick. Crude oil prices, which are higher, are impacting names like ONGC, Asian Paints. But at this point in time, we are also seeing the OMCs also in focus because of the crude, uptick above $66 a barrel. That's something that we look at. Bharti Airtel opening about 2% higher. Tata Steel opening about 2.5% up. Coal India 0.7% higher. JSW Steel. So metals, commodities, they are in focus again. In trade as of now, Reliance Industries from the large caps, that's up 0.5%. ICICI Bank about 0.4% higher. You also have SBI above 800 levels at this point in time. Shriram Finance 1.7% up. Among the top movers in trade that are contributing on the positive side right now on the markets again. Among sectors, barring consumer durables and FMCG and slight losses on private banks, rest of the sectors hold up. Metals clearly are shining through, 0.8% up. IT space about 0.4% higher in trade as well. Defense stocks back in focus. Garden Reach, sharp moves. Cochin Shipyard up 5% higher at 1650 odd levels that can be seen on this one again. We are also looking at some sugar-related stocks. Dalmia Bharat Sugar, that's up by about 10 odd percent in trade. Some of the stocks that are moving in from this basket. Paytm, because of the lack of inclusion there on the MSCI, you can actually see a 3% downtick, 830. That's the kind of impact that we are looking at on the overall set of the market. So we are awaiting Mr. Rudra Murthy is joining in to share with us his view on the market opening. Let's see whether he has joined in on the program with us. But in the meanwhile, we'll also look at how some of the other stocks are moving right now. VIP also after earnings is down by about 4.6%. So keep an eye out on that. Syrma SGS Technology, again, earnings impact 5.3% lower. Those are some of the other stocks that are clearly reacting. Results impact on ITD cementation positive. 4% higher on this stock right now at this point in time. So there are mixed reactions. Wherever the earnings are positive, it's getting rewarded, whereas other places you can see a mild downtick at this point in time. Let's go back to Gaurang in our conversation there. Gaurang, I wanted to also discuss with you what's happening with the metal space since that's in focus. IT pack, those are some of the pockets that we will discuss now. Metals, clearly, I want to understand what's the view that you have. It's been a very volatile space to be in. It's always seen as a very cyclical space. How would you approach metals pack? Do you think there is one segment of the market experts who believe that, this could very well be the year of metal re-rating? Is that a case?
Re-rating and I think positive impact will take time. And I also mentioned that if you're getting invested in metals, have 2 years plus kind of time horizon because of the headwinds and uncertainty in terms of China, in terms of US tariff, China in terms of whatever is happening, of which I give very less importance to. Domestic, though, has been positive in terms of consumption, Sakshi. Input cost, which was higher last financial year and before that, has been relatively lower. I beg your pardon, has been relatively lower for last financial year. This year, we expect the input cost to be much lower, which will help margin expansion in terms of profitability. And you should have a decent bottom line. We also expect some of the prices in the flat and long products to have an upward revision, which will again be positive. And of course, in terms of China news flow, the sad part is it is overly dependent, the entire metal pack, on China news flow. But as of now, it's been supportive. So we've been positive on Tata Steel, Hindalco, Vedanta, JSW Steel, GSPL, NMDC, to name a few companies. But don't trade or don't have a short-term, medium-term outlook on it. Have a long-term outlook.
Okay, fair point. I think we do have Mr. Rudra Murthy now joining in on the program with us, research head at Patna Investments. A warm welcome to you, Rudra. Good to have you with us. Rudra, how are you assessing the markets? Once we are already seeing the worst of the geopolitical conflict between India and Pakistan probably behind us, and of course, some tensions easing on the tariff front globally, how would you look at the markets?
See, Sakshi, we had the Brahmos candle which came on Monday in the market, and you saw that big move of close to 1,000 points on Nifty, which was not small. Now, what is very important is look at what was the pre-positioning of market. So, as a trader or a short-term view on market, if you want to take, see how was the market pre-positioning done. Even when we had those escalations and all the news which were all coming out, people were very scared. Everyone had hedged their position. No one was interested to go long. And more than anything, right, everyone were buying puts thinking big fall will come. And people who know nothing on market were asking you, should I buy put and should I hold my put position? So market is always smart and wiser than definitely me also. And what happens is when retail crowd is completely hedged, they have bought put option, thinking about war, market will definitely do the other way around. So that's what you saw on Monday. And Friday, I made a tweet saying that this is the time to buy, forget the escalations or de-escalations on Saturday, Sunday. FIIs and DIIs are continuously buying the market. Even on bad days when market gap down opened, happened at 100 point, 200 point, we were closing positive. So all the negative news was discounting in the market, which indicates that market is bullish. And more than all these points, which are more for short term, look at even other indicators. For example, look at various crude oil prices. Yes, I understand we have seen some move yesterday on the upside, but yes, it is very strong between 60 to $65 per barrel, where the FM in budget told anything below 70 to $75, we will be more comfortable and happy. And we are now nowhere at $75 per barrel. We are in that range of 60 to 65. Look at where is dollar index below 100. Look at where is dollar rupee below 85. Look at where is RBI pumping in so much of liquidity, FII pumping in liquidity, inflation in control. You are still the fourth largest country when it comes to GDP. Beyond all this macro news, most important point I'm mentioning, look at the overall quarterly results which have come. Stock prices are always slaves of earnings. And if you have earnings, keep aside all the macro. For me, earnings is everything when it comes to stock prices. And if you see the last quarter earning, compare with the previous two quarter, definitely earnings are far, far, far better than the last two previous quarter earnings. And this tells to me that market is super bullish. Buy every dip, whatever you get. And yes, lot of times I have spoken about private banks, and you have already seen good move in HDFC Bank, Kotak Bank, even ICICI Bank. So I still continue to be very bullish on this private bank, select NBFCs, select mid-cap banks also. PSUs have more valuation comfort. And now the big theme after all this de-escalation, escalation, everything is defense. Yes, look at stocks like BEL, look at stocks like HAL. I won't be surprised. You remember I said Indigo buy at 5,300, buy at 5,500, even when the price was 4,800, 4,700. Same thing I am now telling. HAL, whatever is today's price, you buy even 1,000 rupee more, no problem. Have it in your portfolio, don't miss it. Look at Coforge, it was at 7,200 when I spoke. I'm referring to HAL, not HIL, HAL, Hindustan Aeronautic Limited. So if you see HAL, look at Coforge. Coforge was at 7,100, 200 when I was telling this will be a move like Indigo, what you see, and it is 8,000 plus. HAL at 4,600 is a buy. HAL at 5,000 is a buy. Now it is 4,600. So you have to be very right in picking your stocks. You have to understand the themes which will come next. You have to see the valuation comfort. You have to see the margin of safety. You have to see what next for short term. So for me, very, very, very bullish on defense as a theme. And my top two picks there will be BEL and HAL. IT still has lot of valuation comfort. Look at Tech Mahindra, look at Coforge. So these are all wonderful opportunities to buy into.
Absolutely, Rudra. So, set the context right. You are bullish on the markets and various pockets which are offering great opportunities. Gaurang, coming to you, we were supposed to discuss IT. Remember it's been an oversold sector, has been seen, and there is some kind of a pullback that's happening. A lot of global uncertainty is now clearing off. Do you think it can get back to its heyday?
So for sure, definitely think so, Sakshi. And we were in conversation post the tariff announcement and even before that, when the entire world was thinking that the US is going to go into recession, blah, 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 slow down, etc., budgetary cuts, discretionary cuts. Indian IT companies are going to starve for business. We remained positive then. This happened even 3 years back. IT was one of the, laggards. Because of the same reason in US, we remain positive then, we remain positive now. And my sense is that uh, you may have a little bit of overhang on any sector, any company. I mean, it's not like each and every quarter you're going to have a decent 12-15% run rate plus, and there's going to be all honeymoon story to tell for those sectors. But it's not like that. I mean, there are events, there are uh, you know events which unfold can have a negative impact from short to medium term. But does that mean that you have to take a call looking at the short term, medium term problems and exit from those investments? No, I don't think so. So we are positive. Frontline, I mean, large cap, mid cap, small cap IT companies, and fourth quarter always historically was a little bit subdued for IT companies. So no surprise over there. So we are positive. We remain positive on IT.
Okay, where else do you think, Gaurang, before we let you go, that we will be now seeing leadership signs when it comes to the markets and the recovery from now on to all the levels that you did point out above 25,000, above 25,500? Where do you think that leadership can come in from?
So my sense is financials will continue to hold the limelight. Cement is the other one. Cap goods, engineering, power. These are the other two sectors. So these are 4, 5 sectors where we feel. And of course, your defense will continue. I mean, I will never get tired talking about it. Sakshi, you know that uh, view that we've been holding out for the last many, many months and quarters and years. But yeah, I believe one of the sectors that will do it, cement, cap goods, engineering, power, banking, autos, and defense. I think these are some primary 5, 6 sectors which we understand at Geojit Investments will do good in terms of long-term investment.
Fair point. Okay, Gaurang, great to speak to you always. Thank you so much.
You.
Appreciate your time and your insights on the markets with all our viewers. See you soon on another edition of Market Today. We'll continue our conversation with Rudra viewers and we'll try and understand from him where else can we really look to buy some opportunities in the markets. 24/700 is back with us. Remember, yesterday it was like a slightly volatile day, but things are now kind of finding their feet back, and we hope that this improves for the better. Rudra, I think it's the broader markets that are coming back. How are you looking at both mid and small caps? What is the ideal approach with retail investors you would advise here?
Sakshi, really love the questions what you always give me, and that will give me a clear view to express on market. So thank you for that. You are on dot. I'll give you with data. See what happened yesterday. Nifty was down 350 point yesterday. Bank Nifty was down 500 point yesterday. But see what happened to mid cap and small cap. Both were up. This is a clear indication that yes, let me be very clear. From October last year to March this year, 6 months we saw clear pain in market, and that was because valuations were higher, earnings were lower than expectation, and yes, we saw that hit and market came back to fair level from October to March. That is 6 months period. And large cap started participating from April, and from April till today, that is we are at the half period of May. So last 1.5 months, mostly the move has always been in the large cap. Yes, now the move will start in the mid and small cap. Broader market will start participating from now on in general. I know a lot of people have got tired holding the mid and small cap, and last 1.5 months they have seen market moving up, but their portfolio is not moving up. And now what retail will do is they will start selling all their stocks when the real mid cap or small cap rally is just getting started, and it has got started yesterday. And I'm telling, this is the time to put fresh money into good quality mid and small cap. Don't buy anything and everything, and don't buy simply because some stock has fallen 50%, 70% from the peak. So let me buy because this stock was at 1000 rupee. I'll give you the best example. Jansol Engineering was at 1100 rupee. I think today it is available at 60 rupees or something. So people will think, retail people will think, let me buy Jansol Engineering because it was once at 1100, now available at 60 rupees. In my lifetime and your lifetime, Sakshi, Jansol will not come back to 1100. For me, it is not even worth buying at 60 rupees what it is. So don't buy a stock because it was available at 1000 rupee 3 months back. Today it is available at 60 rupees, so let me buy. So broader market will participate, but you have to buy quality mid cap and small cap. You have to buy places where you have valuation comfort, and you have to buy them and hold them for a good period, because you can't expect big moves to come in short period. Trading in F&O is different. Trading in stocks are different. Trading in index is different. Option trading is different. That too, in that buying side of option is different. Selling side of option is different. See what suits you the best and see where you are making money and do where you are making money the best.
Absolutely. Rudra, I really appreciate the way you are absolutely clear and you pass on that kind of a thought to our viewers as well as to where you think the maximum amount of people make their mistakes in choosing the stocks. When there are some kind of indications or sharp fall, they do believe this is an opportunity, but they must look beyond. In this extension, beyond Gensol, I want to add on two stocks. You've talked about both these stocks in the past, but I want you to reiterate because in the last few days, the conversation around these stocks has further heightened. First one is Yes Bank. The second one is Vodafone Idea. These are the two stocks that I want to bring up again for your clear thoughts. So Yes Bank, again, there is some thought process, M&As happening. There are some kind of an indications of earnings improving, management changes happening as well. And Vodafone Idea also today, there is some increase in weightage on the MSCI space again. How are you looking at the developments that are taking place on both Vodafone Idea and Yes Bank? Is there any sign of comfort, or should one again be wary of these stocks and be aware in case this could be another trap?
Sakshi, very, very clear. I want to be proved wrong, and I want Yes Bank and Idea to go up because a lot of retail people are into it. But I am having a clear no for both Idea as well as Yes Bank, and I'll tell you why. Why do you want to buy Yes Bank when you have quality bank like HDFC Bank? I don't have a rule that I have to make money only in Yes Bank. I have a rule that I want to make money in market, not in Yes Bank. And let me tell you, Yes Bank was available at one point of time, if I'm not wrong, at 600 when I said it is not worth buying. At 400, I said it is not worth buying. Even at 20 rupee, I will say it is not worth buying. It can go to 30 rupees and you might feel like I would have bought it at 20, sold at 30 and I would have made 50% gain. Money cannot be made through these type of stocks at all. Even when you trade in quality and not in where you want to buy it at 20 and exit it at 30. And you don't have to do any fundamental research or technical research for this, Sakshi. Ask 10 people around you who have made an FD in a bank and ask them where they have made their FD. And I'm sure out of 10, 9 will tell they have made their FD in bank other than Yes Bank. And that simple analysis will tell you where to put your money. I don't want to do anything else. Again, I'll ask you the next question. Talk to 10 people who have at least one mobile with them and ask them, who is your mobile operator? Is it Jio or is it Airtel or is it Idea? So when you ask this question to 10 people around you and ask them how many of them have Idea connection with them, out of 10, I'm sure 9 will not have. So if this is the case, tell me how should I put my money in Yes Bank or how should I put my money in Idea? So let me make my last statement so that we can discuss more on market. Say no to Yes Bank. And I have no idea about Idea.
Okay, clear thought there from Rudra on both Yes Bank and Vodafone Idea at this point in time. Okay, Rudra, we'll try and look at some of the other pockets then in the market where else we can really take your views. You did talk about the mid and small caps and how there are some opportunities emerging there. On the Nifty 500 also, there is some very smart move that's taking place. Let's also look at the defense continues to, move up higher. So GRSE, Cochin Shipyard, sharp momentum that can be seen, 12.5% on GRSE. It's back about 21.57 now. Cochin is now at 16.48% higher. Acme Solar, SW Solar, Zentech, all of Mazagon talk 4% up. This entire space is definitely in focus. Some of the metal pack stocks are also coming back in focus. Nalco, Tata Steel, that's coming back in focus too. Then let's also SAIL is also back. You have some momentum there as well within the broader markets in trade. So beyond defense also, if I have to ask you on the Nifty 500 basket, what ticks your attention, Rudra?
Great, Sakshi. So you want now names which Rudra likes. No doubt Yes Bank and Vodafone Idea was a no. But see, you have to understand there are good quality mid-cap stocks. Why you want to see Yes Bank and Vodafone? I'll give you another kind of an example. Look at Paytm for that matter. I'm not referring to the price where the IPO came, and definitely that was not a good price to buy Paytm at around 2000 rupee in the IPO. Now Paytm was available to you at 250, 300 rupee, forget that. Even now at 840 where we are talking, even after that, yes, it has not got included in MSCI. People were expecting that inclusion to happen. And yes, I also know that Paytm, you had a block deal, if I'm not wrong, day before, and you had yesterday or day before where the stock came down also because of the block deal. So for me, 800 rupees a rock bottom price on Paytm, and it's a great price to buy the stock. Even at current market price, if you buy, where you are today getting it 2.5% cheaper because it did not get included in MSCI, which was expected by a lot of people. But then for me, this dip is a buying opportunity in Paytm. I want to buy at current market price and on all dips to 800. Keep a stop loss somewhere at 770 and look at target of 1000 plus to come in Paytm. And for me, it's a great stock. Many a times I've discussed to you about themes where even for that matter, defense, if you want to buy, look at BEL, look at HIL. And IT, look at stocks like, for example, Tech Mahindra, Coforge. These are all stocks where even at current market price, Emphasis, Wipro looks very, very attractive to me. Valuation comfort is very much there. Look at metals. For metals, if I have to pick up stocks, I will go for Hindalco. I will go for even stocks like Vedanta. Look at even Nalco and look at the Jindal Steel, JSW Steel. So for me, metals has a long way to go. And now China and US tariff issue getting settled will definitely be very positive to metal. And yes, private banks I like, and you know the names there already. But the point is, you have already seen that good move in private bank. Now it is time to even go for second tier private banks. Look at RBL Bank. I was again recommending this stock for a long time from 190, 180. Even at 210, I say RBL Bank is a good buy. But I may not like in the same fashion Indus India Bank or Bandhan Bank. For me, RBL is far, far better. Don't look at Indus India or Bandhan Bank. Even second after RBL, Federal Bank looks good. So if you want to go for a second tier kind of a bank and private bank, look at RBL Bank and Federal Bank. Pharma looks very good to me. For me, especially in pharma, look at stocks like Arbindo Pharma. Even for that matter, look at Divi's Lab, which I was constantly telling. So look at even Laurus Lab. These stocks can definitely do good. So metals, pharma, and I even spoke about IT. And my all-time favorites like your private banks, NBFCs, where I spoke about HDFCs and where I spoke about the ICICIs. And in NBFC, you have already seen stocks like whether it is Bajaj Finance, Shriram Finance, Chola Finance. But then one thing is very important, Sakshi. Earlier, whenever I come in your show, I used to repeatedly tell this is the time only to stay with large cap. Wait, let us put our money into large cap. Later on, when the move starts in broader market, we can even shift from large cap to mid and small cap. And I will tell you when that comes. And that opportunity has come from yesterday. Now it is the time to move even from large cap to mid and small cap, but don't move to Jansol Engineering, Yes Bank and Idea. Rather move into stocks like the big list which I have given in mid cap. Look at Paytm, look at BEL, look at Exide Industry. I'll give you more names. Look at Indus Tower. So for me, Indus Tower, Exide Industry, these are all names in broader market which can do very, very good even from current level. My two top picks, if you ask me from a broader market viewpoint, which is also available in futures to trade, and someone wants to positionally take a long on in futures. Yes, for me, Exide Industry, Paytm, This is Paytm is also available in future, Indus Tower. So these are all stocks which will do very, very good. And if you want to go for large cap, even at current market price, as I told you, for me, like how I said, Indigo is a big buy and it should be held in portfolio. Even today, you should not exit Indigo. But for me, the next Indigo will be the HIL, will be the BEL, and you have to just buy them and keep riding the move on the upside.
Absolutely. Thanks, Rudra, for sharing all your clear ideas in terms of sectors as well as stock choices that one can continue to build on their positions in the current levels as well in the recovery that's ongoing in the markets on that front too. Let me just talk about auto space at large, Rudra. That's something that we have not discussed. Tata Motors came out with the numbers yesterday. So what's your fresh thought there? Eicher Motors comes out with the numbers today. Overall on the auto pack, what's your fresh approach? Are there any key stocks that you like more than the others?
See, M&M is my top pick when it comes to autos. And if you ask me three stocks from autos to name in the order, it will be first M&M, second M&M, third M&M. And Tata Motor was definitely a good buy where valuation comfort was there at 550, 560. And that was the price where you should have entered into Tata Motor. But then, yes, if you have missed the bus on Tata Motor, you have to wait for lower levels. Might be now I say levels closer to that 650, 660 will be a good entry point on Tata Motor. And I also know, yes, M&M has moved up enough, but still there is space for me in Mahindra and Mahindra. So I will still, auto is not the preferred sector to me as such when I compare to other sectors which I've spoken. But then if you ask me to pick stocks from auto, I will go with M&M.
Okay, got that. I have to ask you on one space, and that's the paint sector and Asian Paints specifically. Rudra, what's your view there? Now, why I'm asking this again is we have seen all through FY25 that the earnings have been rather disappointing. There have been several, headwinds that the paint space is facing. There is rising competition, bigger players entering at this point in time. There is the risk of, even though Asian Paints continues to remain the largest company by market cap, there is, kind of a concern as to how will things progress. Now, there are some media reports unconfirmed. We do not have a confirmation on that on Business Today yet, but I'm just throwing that because it's a buzz, Rudra. The buzz is that Reliance Industries is now planning to sell 4.9% stake in Asian Paints. We do not know whether it's true or not. There is no confirmation. And the report says that Reliance may be looking to potentially exit a 17-year-old investment worth over 11,000 crores in Asian Paints. Now, we do know when we look at historical past, Rudra, that Asian Paints has been a company that has always posted annual profits, that has been one of the biggest wealth creators of the last many decades, 1, 2, 3 decades, for those who've been building onto their wealth. But I want to understand from a retail investor who's looking at fresh ideas right now. Do you think the peak performance of Asian Paints is behind and one can now actually look beyond it once things settle?
See, Sakshi, let me be very, very clear. Asian Paint, yes, valuation comfort was not there earlier. And yes, competition which came from Birla was something which made Asian Paints come down. And yes, whatever prices we have now seen in Asian Paint, I feel at current market price, if you want to build a portfolio of large cap stock, and if you ask me, should I include Asian Paint in that portfolio? My answer is yes, because I don't see it coming below 2000 rupee, and it is another 5 to 10% kind of a move on the downside from current market price, which it might see. I'm not saying it will come to 2000 rupee, but what I'm saying is the downside is very limited in Asian Paint. Let me make it very clear to our viewers. Yes, when Reliance was at 1100, 1200, no one wanted to buy Reliance. And I said from here, you may not see more than another 100 rupee kind of a fall. This is the price to buy Reliance, I said. And from there, you have already seen Reliance going non-stop. Like a mid-cap stock, Reliance was moving post its result. And if I'm not wrong, it went up 7-8% in 2 days post its result. 8% on Reliance in 2 days, I have never seen, being the highest market capitalization player. Now, in that category, when Reliance was at 1,100, 200, when I said the downside is limited in Reliance, I'm now saying the same answer. The downside is very limited in Asian Paint. 2,000 rupee below, I don't see Asian Paint. And you don't have to wait for that price to come and then buy into Asian Paint. But it is not a momentum stock. It is not a trading stock. It's a stock to have in your portfolio, and you will make money in Asian Paint buying at current market price and holding it for next 1 year. And I understand there is competition. I understand there is Reliance exiting stake, all that stuff. But I also understand all that is already there in the price. And that is the number one reason why Asian Paint, which was once available to you at levels closer to 3,500, is now available to you closer to that level of 2,300 or 2,200. And all that move from 3,500 to current price has happened because all this news is already in the price. And for me, there is a difference between a great company and a great stock. A great company can be a company doing fabulous, but stock price is not at a comforting level, or my margin of safety is not good in it. So that will be a great company, but may not be a great stock to buy. And for me, Asian Paint right now, earlier it was a great company, but it was not available at a great price to buy. But now for me, Asian Paint is a great company available at great price. And whenever you have a great company available at great price, you should not miss it. And whenever a bad company is available at a great price, I will still not buy it. You give me Jansol Engineering, you give me Yes Bank, you give me even your idea for free. I will not buy it even for free.
Okay, clear thought there, Rudra. That's what we appreciate about you and all our viewers too. So we always thank you for your clear thoughts and understanding
Actually,
of the markets the way.
It is all God's grace, and I speak not from my mind, and I speak from my heart. And if our viewers are getting benefited because of this, yes, the effort taken by you and me and our channel here to give that extra bit of information and sharing my small knowledge and small experience and wisdom what I have in market for last 23 years, I'm here to give that to good people who are there. Support from you and your channel is so much appreciated by me.
Absolutely, Rudra. Always a pleasure to speak to you. Thank you so much for all your insights, and we wish you well till the time we see you next very soon on another edition of Market Today on Business Today Television. Thank you for being with us. Viewers, we are now inching up, and we are seeing that the Nifty is now back at 24,750 odd levels. So we are now up and about 0.7%, slowly and gradually moving up across the board. There are some gains that are being seen even on the broader markets, even on the Nifty bank, many sectors supporting the indices and the sentiments right there. So we'll continue to track the markets for you throughout the course of the day. Do stay tuned with us on Business Today Television.
With these powerful words from the legendary poet Ramdhari Singh Dinkar, Air Marshal A.K. Bharti said